On today's show, Lynda Artesani and Sarah Prevost, co-founders of The Proper Trust and experts in legal accounting for law firms. We'll be talking about how to properly set up your law firm's accounting system, avoid common mistakes, and create a scalable accounting system that gives you real visibility into your firm's finances to support better decision-making and long-term growth.
We've been through a few bar audits for clients because that's really a difficult moment for them. But we also know there's a really short window of time that you have to produce the records for a specific time that they're looking at, and it can be random that they just knock on your door and want to see October of 2024. And now you have to pull those documents up.
Welcome to the Alpha Lawyer Podcast, a show dedicated to exploring what makes law firms thrive. I'm your host, Jason Marsh. Join me as I interview some of the smartest thought leaders and accomplished law firm owners in our space. Together, we'll dive deep into law firm operations, marketing, technology, finance, and everything else you need to build an incredible firm that allows you to live your best life. Hello, welcome back to the Alpha Lawyer Podcast. I'm Jason Marsh, and today I'm joined by two people. I'm joined by Lynda Artesani and Sarah Prevost. Hi, Sarah. Hi, Lynda.
Hi.
Yeah, it's nice to have you. I was reading your article in the ABA's law practice today on setting up accounting systems for law firms. And I think, honestly, this is one of those areas a lot of lawyers, a lot of business people, I think, especially when you're small or you're starting out, you either ignore this or you oversimplify it. And I think the problem is what's lost is all the visibility you get in your business or your law firm by actually having this stuff set up properly, whether it's cash flow or any compliance risk, things like that. So today, I want to talk to you all about breaking down how law firms should actually be doing this properly, what I think some firms might be doing wrong, and do it in a way that's going to support growth, profitability, and above all, just a clean operations and ability to look at this stuff in an insightful way. So before we get into all that, I just want to I want to introduce everyone to each of you. So first, Lynda. If you're not familiar with Lynda Artesani, she's a leading expert in legal accounting. She's the founder of Artesani Accounting. She's the co-founder with Sarah of The Proper Trust. And both of those are designed to help law firms get their financials dialed in the right way. And she's been doing this for a couple decades now, 25 years. She's been named a top QuickBooks Online Pro Advisor of the Year. And also author of the book, The Modernize Your Law Firm. Both her and Sarah, they host the Accountants Law podcast, so we'll have some of this information in the show notes. But anyway, Lynda knows her stuff. Then we have Sarah. She also brings a couple decades of experience focused on specifically helping law firms with their legal accounting and their financial operations. Also, again, co-founder of Proper Trust. And she worked closely with law firms, streamline their systems, build stronger financial infrastructure. And the part I want to mention, you're really dialed in with stuff like Clio, LeanLaw, Gusto, Zero, all of these tools. We'll talk about those a little bit later. But Sarah's in the trenches helping these firms actually implement this stuff. And that's the point I wanted to make. So just to kick things off, in reading your article, what stood out to me, and honestly is not all that surprising, but it's how many law firms either don't have like a real accounting system or a properly set up accounting system, and it literally could be very jacked up, and they're just trying to manage these things themselves. And I know when I was a business owner just starting out, that's what I did. I sort of top line, bottom line, I had no insight what was going on in the middle. And it's just the idea that I wanted to recognize that accounting and the various complexities that come along with it, for some people can be intimidating or even overwhelming, and that as a result, people tend to avoid it or underinvest into actually setting up these things properly. And the reality is there's a lot of benefits to getting your finances and stuff streamlined, because this helps you understand your operational efficiency, having better insights into the financial health of your law practice, all of which just helps you make better business decisions, right? And allocating your resources. So let's start with, where do you see firms going wrong with some of this stuff?
I can tell you that a lot of times if someone's just starting out, they may come off of a big firm and they're starting out, and sometimes they come with an agreement with the old firm that they can take some of the work and they have actually work to start with, which is really awesome to see. And then they might have a specialized agreement with the past firm, And then they think, well, I'm so small, I'm just going to grab a spreadsheet and I'll do all my books on a spreadsheet and that'll be fine. And they don't realize how quickly they grow. And one of our little jokes Sarah and I have between us is we need to make sure we ask about the side spreadsheet. And what was the name today, Sarah? We came up with that, the spreadsheet.
The magic sheet, I think,
is magic sheet,
what was
yes.
sent to us.
Where's the sheet that you have hidden? Because they don't tell you about it. They'll just say they want to start and they want to get a good start. And it's wonderful when they come to us and they're like, I don't know this stuff and I want to do it right, because they know they got the big compliance hammer hanging over their head. They don't want to do it wrong, and they come to us right from the beginning. We love that. And if they did have a spreadsheet on the side, we'll have to migrate that into the software. But I think that's probably one of the bigger mistakes that we see if they come to us and they've already started in a process that all of a sudden became unmanageable. And we've seen some pretty interesting developments of how they've done the spreadsheet. Sometimes they'll have it all on one page with different columns for every client. Sometimes they'll have tabs for all the clients that'll all land in the front page where the total comes in. And it does work. It's effective to a point. Then all of a sudden you get really busy. And one of the questions we always ask them is, when are you doing this bookkeeping work? And the answer is, Sarah?
3 a.m., 1 a.m., at the end of the day, at 10 o'clock at night, and then you're exhausted, or you wake up early. Some wake up early to try and do this because the thought is, I'm present, I'm available.
And so it seems like you pointed out, the best thing to do, you're starting out, just meet with you guys, get this stuff set up properly. The part that surprises me is that people are doing their accounting in a spreadsheet. Because I feel like when I started I didn't know anything, but at least I set it up in Quickbooks. I don't think I did a particularly good job at it, but I knew to at least start there, because I imagine if someone's been doing it for I don't even know how long, but in a spreadsheet, that's probably then very difficult for you to unwind that and get it all into the format that you need. So it would make a lot more sense to start doing it the right way from the beginning. So let's talk about what that looks like in terms of a proper accounting system. What does that need to look like in terms of getting started?
Like a proper ledger system, some sort of accounting system. I think the idea there is when you select, you said Quickbooks. There's other ledger systems out there. When you're selecting these ledger systems, I honestly think that you need to look at what's the practice management software you selected, because does it integrate? Sometimes it's nice to not have all your eggs in one basket. There's a lot of programs out there that offer a ledger system within it. We find constraints with that. And so when you're making these selections, it's hard to know at the time. There's data migration services that we can do to move people off, and others have done it too as you grow. But I think what you said, Jason, was really important, is select something. You may not get it right. You're in it. You've at least attached a bank account and you've got something coming in. And the formation of that, the nitty gritty is what I like to do, like that foundational support. That is, it's hard to know what you're going to do. So as long as you've got the data coming in, there's places where we can help design and guide you. At least get your sales into your sales. Don't put those loans into sales. Sometimes we see that. People tend to like to bucket their borrowed money into their income. They're like, whoa, that's overpaying in taxes right there. And then you've got things, right? Like, I mean, ultimately, I think when you start a business, you really need to think about not just, like you said, the opening line of all these things, but what you're going to overpay in taxes if you do it wrong. I mean, that's so obviously paying taxes, that's something that everybody cares about. And certainly if you're, I assume, taking a loan and reporting that as income, that sounds absolutely insane to me. But I imagine people do that because really they probably know deep down it's not income, but they're just categorizing things improperly in the accounting system. And as the saying goes, garbage in, garbage out. So if you're not putting this stuff in correctly, you're going to get bad outputs. And so just to clarify one thing, you've mentioned a couple of times, a ledger system. Is that just accounting for an accounting system? Yeah. So when we say a spreadsheet, a lot of people come to us and I've got my books in the spreadsheet. That's not a ledger system. A software like Quickbooks Online, like Xero and other types, they will have a ledger, meaning there is a foundation, a chart of accounts. You have income separated from expenses, separated from your bank accounts, and you've got other assets. Maybe you have an office space. Maybe you have furniture you purchase that, needs to be accounted for a certain way. You've got credit cards you opened up the business with, or you're running the business on. You've got other things going on. Of course, your trust account, all of those details. And then bottom line in the end is kind of, you opened it up to in the show, is ultimately your equity in the business is where you're standing at the end of the day. It's like all of this in and out, everywhere else in this ledger system. How does it all come back down to that equity that you have in your business? Firms do it all differently.
There's no question about it. And you described a lot of different things there. Very difficult time. Yeah, I got the tool, but I didn't really understand the difference between all of these things. And there was quite a big learning curve that took me years and years and a lot of mistakes to figure it out, which I think it's important that we're having this discussion because, and I do remember somebody telling me, just hire someone to set the thing up for you correctly and tell you where to put the information in. Like, even if that's all you're going to do, you're not going to have their help ongoing, just get it set up properly. And I think I eventually did that. Yeah. And that's what helped really change things for me because now I at least had the most rudimentary understanding of where to put things, but they were going in the right way, they were categorized in the right way. And so then at the end of the year, everything at least outputted properly and maybe, maybe there's a couple mistakes, but a lot easier to fix. But when it comes to setting this up right, Lynda, how does this really, when we boil it down, impact things like decision-making, cash flow, just understanding the overall health and performance of your practice?
Yeah, it comes down to your chart of accounts. And a lot of times when we get the files, sometimes we see employee names on the chart of accounts. They don't understand equity at all. They don't even understand the type of, like, how are they filing their taxes? What is your type of corporation? I can't tell you how many times I've had deer in headlights. Well, an LLC, are you an LLC that elected at sub S? When you start talking to them like that, remember, that's not that they went to school for, so you're speaking a whole different language. Sometimes we just say COA, let's talk about your COA, and they're like, what's a COA? You got to remember, the attorneys don't know that any more than we know their acronyms. So educating them on how to set up the chart of accounts is important. Getting a proper one in. I mean, there's some unique qualities to it when it comes down to the type of firm that it is, how many partners, and you want to put that on the chart of accounts properly. I see a lot of them where they just grab the boilerplate that came with QuickBooks and it just says owner everywhere because it's set up for a sole proprietor, and you want to state that properly. It's just so many little pieces of things that I think that they're better served to hire somebody to set it up like you did. Set it up the right way. It sounds like
if you have more than one owner, multiple partners, it sounds like having someone set it up for you ought to be non-negotiable because that right there is going to create all sorts of problems for you, like you're talking about owner's equity, and maybe there's loans on the business and things like that. I can see that getting screwed up pretty easily.
They have payroll. If they have payroll too, it's different accounts for payroll, and that always is a very scary area for the attorneys, especially the first step they take to payroll.
Yeah, payroll, I remember that as well. Yeah, payroll is tricky, getting the payroll inputted properly. I remember spending a long time, and again, I should have hired someone to do this for me. Eventually I did, but spending a long time trying to figure out how to put in the taxes for the employee taxes, the business taxes. At that time, I think I even struggled to understand the term liabilities, and just it can get crazy because there is a lot of accounting speak in specific terms around finance that you may not be familiar with if you're just starting out. And so I want to we'll get into more details around the chart of accounts, but just if big picture, what are the sort of the core components that any firm owner should be thinking that need to exist in their accounting system from day one? Just to break it out broadly, and then we can go deeper.
I mean, you have to have your assets, right? You have to have what you own, which is typically in a law firm, it's their cash. That's what they're really looking at. And advanced client cost, if they have that happening inside their firm where they front the client expenses and then they bill it back. So it just kind of sits in a clearing account. Basically, that's what that is. But it's an asset while you front the money. So that's there. You've got your liability accounts, which you'd have your credit cards. You're going to have any loans. We've seen so many files that come on now, loan expense, and they're expensing the entire payment. Or if they purchased a vehicle for the business, that could be on there too. I mean, a lot of times too, for law firms, we'll see websites. They may spend like $25,000, $30,000 on a website. Then you want to have that. That's a big ticket item. So any big ticket items that they spend money on, startup costs, you want to have that. We've had that conversation when we're looking at it, and we're like, well, where is what you spent the money on to buy the equipment? Because we don't see it anywhere here. And maybe it was lesser than, because sometimes you can have computers that aren't that expensive, and you'll go, oh my God, yeah, I spent a ton of money before I started the business. Well, we don't see it anywhere on here. So where is it? And then they'll open up.
So I want that's a good one. I'd like to stop you on, right? Because there's startup costs in launching a law firm, like any business, right? And it's not like, oh, I spent those before I maybe formed the LLC, so that just kind of is gone. No, that can get factored in there as well, right? What are some of the common ones that you're going to want to make sure get in there, especially the bigger ones, right?
Yeah, the bigger ones. I mean, sometimes they set up an office. They have a lot of furniture that they paid money for. They bought a printer. They bought a scanner. Sometimes it depends on the price that they paid for it. But if it actually doesn't depend on the price because they paid for it ahead of time. They probably paid for it on a personal card of some sort. So we have to get that into the records and make sure that that's added in. A lot of times that gets completely missed. And it's a question we ask them when we're going through a scope with a client. Ask them how they want to do it. Because in the end of the day, when we work with a client, I had a really sweet attorney one day. We were talking. I think we might have been throwing the acronyms around, me and Sarah. And she said, that's why I have you guys, because I love to be in this verbal world. I don't like all these numbers. I don't want to talk about numbers. I just want you to give me it. And we've made lots of pretty graphs and things for her. She loved the graphs because in her mind that worked better. She definitely lived in a verbal world with her type of law firm. I think she might have been litigation or something like that. And she was like, this is how we work. She goes, remember, attorneys we like to argue, but we really, when you start to talk at this level, you've lost us. And it's our job to really educate them as we go through and set this up. Because they actually do want to know why things are put where they are. They don't want anything to be wrong. And I think sometimes it's part of what we do with our client to kind of educate them to what is going on in their file. But we also want to get the end picture of what they're looking to see. If they're planning on firm growth, what are their goals? We want to talk to them about their goals. And a lot of times, Sarah will start out like asking about their family and then finding out, okay, they got a kid going to college or they're going to move into a new house and they're trying to get all the records together for the bank. We need to know those things, and those don't come without asking the questions. And finding out goals comes from those questions as well.
Well, I think that's really good to hear because sometimes I think there's two real pieces to the accounting equation, right? On the one side, it's the numbers, making sure they're accurate, particularly when it comes to filing your taxes. You want to make sure they're, all those are accurate. You're maximizing your write-offs and so forth. And that's all well and good. But the more important part is more of almost the CFO aspect of looking at those numbers and going, where are you trying to go? How healthy is your business here? You might be able to identify issues with how much money you're making on certain services that you're providing. Obviously, all the expenses, maybe you're overspending in certain areas. But to be able to for someone to be able to look at that whole picture and be able to take that and have some actual business insights of what people should be either trying to improve or just do more of this. This is really working and this isn't working and so forth.
Yeah, I feel like numbers tell us a story where words tell the attorney the story. Mm-hmm. And for us, and graphs help them we come together, but it's pretty quick. Like we can sense something. Well, like we're not doing the work. Someone on our team is doing the work. They'll present it to us and then you'll see it. We'll sound like little squirrels. We're like, what about this? What about this? What about this? Because we're already figuring out the story, and we can possibly kind of get to a point where we're like, maybe we need to have a meeting. Maybe something's going on, or they've made a mindset shift of the marketing, for example. We're seeing a lot of dollars go out for marketing. Okay, but we're not seeing the revenue switch. So what's the plan? What's the idea behind it? Because obviously, things need to align a little bit at some point. What does this endeavor look like? Or we can spot a new business coach involved in the style of reporting that's needed or the asks, and we have to pause and say, okay, let's find out what was the reason for the coach so we can help bridge the details. Just like we want to be involved. We don't do taxes. We're business owners ourselves. So we just like a moment to talk with your tax person because maybe we're not seeing something that we don't do the other side. We just want to help you. That's all we're trying to do is kind of bridge. To your point, Jason, when you're talking about in the beginning and you're setting up and you're probably like, I wish I opened the door sooner to get all this support. But once you get that foundation and you start to have that clarity, you don't have to know every piece of it, but at least you get the foundation pieces to help decide what driver is going to be the year's worth of driving. Like, what are you going to put in that car that's going to protect you into the next level, if that's what you want. Not everybody wants to go to the next level. Yeah,
I think that's a good point, that the accounting it's a foundational function of the business that really understands all the moving parts. And so if we're talking about this foundational piece, let's just talk about just choosing the right accounting software and what tools people should actually be using to run all of this stuff. And so what do you think law firms should be looking for when they're choosing or considering some different accounting software? Because I know there's lots of options out there. You probably have your own recommendations, but just more broadly, and then we can talk more about some of the specific options that you quite like.
We actually we work a lot with QuickBooks because it integrates with the other softwares we like. With Clio or LeanLaw, we like those software integrations. They're solid, but we like Xero too. Xero is kind of it's been around for a long time, but we're getting more clients finding that a better fit than QuickBooks, that they're actually using Xero and using it with Clio just fine. It does work with Clio, and actually some larger firms, which surprised me because I always thought of Xero as this little small boutique-sized accounting package, but it's really not. In Fit, we've got a pretty large firm running on it, and it runs quite well. They get some great reports. So if you're going to look for a general ledger type system, which is a QuickBooks system or a Xero, because that's really that's everything that happened in your business is inside those products, and then the other stuff sits on the outside. And I like to say it's like putting the the lawyer's suit on top of the accounting software. So you're making Clio will make QuickBooks look more of a software for a law firm because it specifically layers on top. But I think that when you're looking for software and you're looking for the right type of system, look for something that's going to give you those reports that you need. You need a product there's so many out there right now. There's some new ones, which they're popping up all over the place that have a lot of AI features in them. But if you can't use your Clio or your LeanLaw or your MyCase or your Practice Panther on them, and they live in that software, that's where their customers are and everything else. If you can't layer that on top of it and you have to do redundant work, it's really defeating the purpose of having software with AI in it. You're not going to have that synchronicity of the two products.
So this is a great point, and I'm glad you mentioned it. So it sounds like really the two main ones that anybody should be thinking about are QuickBooks and Xero. And obviously QuickBooks has been forever the sort of the small business accounting software. But the point that you made that I think is critical is that it needs to be able to integrate with your practice management tool, whether it's Clio or Practice Panther, whoever it is, so that those two things are talking to each other and you're not having to enter information over here, and then that's where obviously mistakes can happen. So you just talk about that for a second in a practical way, like what actually happens when the integration is there and works well.
Oh man, I love it because it doesn't matter which of those two we're going to talk about. When you integrate, you can quickly see, oh, somebody recorded something here. It's not showing up. I've got a payment, but I don't know where it needs to go. What's happening? Maybe you have a non-integrated service of a merchant service, for example. Let's say you chose to use an outside service. A lot of people do that, and that's fine as long as it meets whatever criteria the law firm needs. And so the manual recording of the payments is a little bit better for whatever reasoning behind it. There could be a numerating amount, and somebody missed a step. That integration comes over, and you're like, wait a minute, I've got money, I don't have a payment. Where is it? Or recorded something on a trust side. Did it actually happen at the bank? Do I see the same thing happening at the source level? I see the data, or vice versa. The inverse happens, right? You've recorded it somewhere else and you don't see it. So we look at it and like, where do you live as a law firm? You live in your practice management software. Where do you generate your revenue? You generate it a lot of times in there because it makes sense. That's where time tracking is and so forth. So as long as the key components of that integrates in and you can align those systems as best you can. We saw it the other day. We were looking at a set of books, and first thing I was like, well, where's the invoice? And there was some integration kind of moments. So we take accounting And then we go one more scale above it. We have to be integrators. We have to understand how software works. We have to know how data is going to flow. Because really, you're the law firm. You're the owner. You have associates with you. You need to practice law. You don't need to be monkeying around with all this kind of stuff in the background. But it's important when we look at revenue at the end of the year, when we look at data at the end of the year and say, how do these line up? Are we, it's an easy one here, referral fee, referral income. Are you going to put it in your practice management software and record it? Or are you just going to record it? And how do you want to see it on the other side, the ledger side? Maybe you don't want it in that system, but you want it in this system. You have a choice when you have two systems like this that talk to each other. So you have a way to kind of work through an accounting system. And it's a lot of words that I've just used, and it's a lot of data that I'm putting together, but it really does impact how a firm chooses to work and operate. So
yeah, that makes all the sense. And you've mentioned earlier a couple of times chart of accounts. And so for people who don't know what that is, and I remember I was like, chart of accounts, what is that? Can you just talk about what that actually is and why it's really important to get that part of it right from the start?
Well, one of the things we tell our clients, so we'll ask for the last tax return if they've been in business for a while. That's a good roadmap of what we need to align on the tax return is in line with your chart of accounts. So it's like the buckets, it's the categories, it's where you're going to place the transactions that are going to get put on that tax return year over year. So you want it to really align and map out the way that that's being presented. That's going to make things easier for the client too. Helps us too when we tie the books to tax every year and make those little tweaky adjustments at the end of the year. But I think that that's one of the reasons why you want to have a good chart of accounts. And we've seen some that I'm like, dear God, Sarah, there is like 4,000 chart of accounts here. What the heck are they doing? And
so what should be on there? Yeah, that's always the thing, right? Like you look at the chart of it's like, is it too big? Is it too small? Like what are some of the right things to make sure you have in your, so it's not too big, but it is, encompassing everything that you need. Because I think that is part of the challenge. People sometimes get very granular unnecessarily in an accounting system and it's not helping you. It's actually just creating a lot more work to manage those details. So what are some of the items that are appropriate for a law firm to make sure are structured, in their chart of accounts?
So you've got your income. Where's your income going to go that walks in? There's costs associated. You brought this up earlier, Jason. What are the costs that are associated with that direct revenue? So there's payroll potentially if you have payroll, merchant services costs. If you have merchant services, those are directly. You wouldn't have merchant service costs if you didn't have revenue. Basic stuff right here at the very top part. And then your expenses, you're going to advertise, you're going to have office supplies, you have your association dues, ABA, those sorts of things. You're going to have you're going to bar dues, your professional liability, so insurance expenses, and these can not categorize by vendor names on your chart of accounts. So do yourself a solid and get those into what those buckets are. So it's insurance, that's association dues or dues and subscriptions, office supplies. You're going to have, if you're paying rent, or you'll pay rent no matter what. If you own a building, you're going to pay yourself that rent. And then you'll have some license fees for doing business in the city or state that you work in, possibly state taxes, depending on your tax structure set up. Those are some basic outlines. And then over on the other side, where Lynda was discussing is, I should bring this up. I'm sorry. Let me go back. You have client expenses. Client expenses can have a home in two places. So you could have your assets where you have your bank accounts, right? And you could have that advanced client cost, meaning you've paid for something in advance of charging the client. You fronted the money, so that's an asset moment. And then once you go and recoup that to get that back, you want to clear it out of that account, or depending on how you choose to operate in your billing, you might do it a little differently. You might do it on the profit and loss. It all can be very confusing, and we just kind of work through that together. So you've got these asset accounts. You might have purchased some furniture. You might have some things up there in the asset account that's an asset to the business. And then you move on down into what do you owe? Do you owe credit cards and loans, and your trust account is a liability? Those are things that you in your liability section, and they are grouped in similar to assets, current, fixed, long-term, all these terms. And then at the end, we have our equity section, which again, Lynda brought into the conversation of the equity section at some point should really represent what your tax filing structure is. And there's some things about that kind of lay out. I mean, you get your standards and then you change it. So, yeah.
So would you say that, just like to summarize, like to say chart of accounts essentially is the
categorization. Gotcha.
Categorization, if I could, you know what I'm trying to say.
Yeah.
Of a variety of activities that are happening in the business in terms of both income. You can have, I suppose, charts of accounts of different sources of income. You mentioned a lot of different types of expenses, and then the other things where maybe you have debt and all of those. And so, you know, we mentioned it a little bit earlier, but are there places you see firms that are either overcomplicating this, as I mentioned, because you can get very granular, or maybe just not putting in enough detail? Is there a specific thing that you ever see in that area?
Yeah, definitely. Lynda, the example I think about is those discounts that we saw the other day. It's always nice to know if you're it's not uncommon for a law firm to offer a discount, because there's maybe multiple things happening in revenue for one particular client. We tend to like to see those as a separate line item to understand what are you providing in a value dollar for the full year at a discount level. Our surprise was somebody wanted it rolled up into, they didn't want to see that.
Mm-hmm. They didn't want to see discounts. They don't give discounts even though they gave a discount.
Yeah.
So they rolled it up into the legal fee income. And at that point, we had the discussion with the tax provider, and he's like, the client's always right. Just stick it up there. We're not going to argue.
In that instance, is that something that could have benefited them from a tax standpoint had they categorized it and put it in the chart of accounts correctly?
Not just
tax basis. So
not just tax. I think it's more of like here's an example. Years ago, I had somebody come to us and numbers don't lie. So he says, I want to hire a part-time paralegal, and I was like, well, how much do you want to pay? Tells me how much, and I'm kind of doing the math, and I was like, okay, let's say around $24,000, just even number. I'm looking at that P&L, and I said, well, you gave that in discounts. Is that what you want to keep doing?
Yeah.
And it was just like a no-brainer moment. It was like, oh, okay, there might be a different way to offer the service offerings, but you could have utilized that tool to be able to see that so clearly, to be able to say, oh, I'm going to make a hiring decision. Mm-hmm. Because I'm offering so much. Let's say you're a solo. That's what you do, is you offer a little bit because you're building that book of business. And another example, Lynda, I feel like this happens a lot, is in the marketing. You get way too granular in marketing. Yeah. And I love Lynda coming into this one.
Yeah, because I see some things, I'm like, oh my goodness. I mean, all right, it's all going to land in the same place on the tax return, and you can sort by the vendor. So you don't need one for Google AdWords and one for billboards and one for, like, you don't need a media or however else you're advertising. You don't need all of that breakdown. I know you're trying to track it, but we can track it other ways. You don't need to track it at that level. And I've seen some with especially personal injury firms, they really throw so much money at it. I could see why they want to analyze that, and we want to analyze that. But we'll come in and we'll say, okay, we see you're spending X on this, and it's a lot. X is a big number. Who's tracking what's working? Let's start there. Because a lot of times they'll look at you like, well, I paid a firm to do that. Are they giving you the answers? Are the calls coming in telling you that they saw you on Google or they saw you on Facebook? Where are they seeing you? And then a lot of times they're not getting any of that data. They're just paying a firm a lot of money to do all the advertising for them. And then that makes them start to think about some of the money. I mean, one of the biggest categories that we have outside of obviously wages or even they use outside, professionals if they're using contractors. The biggest other category is software. And we've worked with firms where we'll come in and look at a brand new firm to us. We look at their AR and all that too, but we'll also look at the expense side and we'll see the software category. And Sarah and I have a unique position because we see so many firms. We know what kind of what the going amount is for the firms. Like we have similar firms, we can look and see which one's doing well and they're doing this or whatever. And we see them and we're like, well, you spent this much on this software. How many users? We look into it. We find how many users are using it. Then we ask the firm to do a head count. And then you find out that, you're paying for 78 seats and 25 are being used. Now you can save them money by just removing all those user seats that it might have been a great software in the beginning and it's not being utilized the way you intended. And sometimes you can buy software, though. I mean, I'm guilty of it, too. We have a little running joke. I tell Sarah, you're already out of the budget. March, you're already done, because she loves the shiny object. But you got to take a look at what works and see what's the best options for you. And really kind of find the best product that works for the client. And we see what works because we see so many law firms from the backside. So we can kind of help guide them through that. A lot of the things that we do in our firm, I never thought I'd be the person advising on software usage in not accounting, but other things. Or I never thought I was the person to help you through, Sarah does a great job at this, HR moments, because these things are happening around us. But that's also stuff that we do. The fact that we come into a firm and we'll say, we'll talk to the tax person if you want and answer a lot of the questions so you don't have to. Oh, they're so relieved. Because you guys talk the same language. And it's true, we do. And we'll help guide them through because the tax person sees them briefly in the beginning of the year and doesn't see them again all year. And we know the story behind the numbers. We know what caused these different things to happen. And that's the benefit of having someone do that work so you don't have to. Because you can take that time back and make more money doing what you do.
Yeah, and I think the important part that people ought to take away, especially when they're thinking about hiring, we're going to hire another vendor to help manage something, but to hire what you all do is particularly important because it cuts across every aspect of what you're doing in the firm. And to the couple of points that you made with the marketing firm, even just to tee up, like, is your stuff getting an ROI? And people scratch their head going, I don't know. I have a vendor, but to at least check with your vendor and try to get some information around that. Or looking at the software packages, how much are you spending actually using all of this stuff? But overall, because you do work with a lot of law firms, you understand what the baseline ought to be and what this stuff should look like, so you can identify issues or at least point things out that people may need to get more information on. And so I think that is just such a critical thing that goes beyond just accounting, right? People think of it as a very dry numbers, that's it. But really, that, as you pointed out, it's telling a bigger story, and that's a story that you all understand through the numbers and can help the business owners and the law practice owners understand that story and what things need further attention, but also things that might be working well. So let's talk about tracking income and expenses, because again, accurate reporting helps you make proper decision making. You mentioned, the reports that certain attorneys like and however they look. Let's just start there. What does good income and expense tracking look like in the law firm? What does that practice in and of itself need to look like?
Well, I think it will definitely come down to how many practice areas are you in? That's one analogy to look at. Maybe how many partners are working, how many associates are working. How do you want to track that? Originating revenue versus associate tracked revenue. There's multiple ways of doing that. It could be in the books. I mean, at the end of the day, you've got a final number. It could be there. Could it be in your practice management software and then it gets fine-tuned and then redone? You could also look at it too by what service offerings offer, how many consults are happening. That's one example. There's multiple ways of looking at revenue, and it sometimes is very clear on the onset. When we're looking at a set of books, we clearly see the story. Other areas, like Lynda was bringing up earlier, is we'll start asking the questions, and then we'll hear, I'll just use PI work, so I'm in the PI for contingency style work. I'm thinking about adding this layer to help smooth out my cash flow. I want to, do hourly or flat rate. Okay, what's that practice area? What kind of revenue do you think you're going to get from that? So the planning of it. Also the windfall moments that happen in contingency work. So there's a lot of planning in that sometimes. And so with these pieces, you want to be clear about what's important to you for revenue, because it ties back to those expenses on how you're advertising or what your referrals, or if it's a discounted moment, and how consults may play into this. How many consults you can only do so many in revenue. There's only so many hours in a calendar, right, for the month. And then what's the conversion? Are you tracking that? Do you want to track that?
And what about tracking the work. In other words, say you have a few different practice areas, and you have different attorneys, paralegals, admin staff working on these different things. Is it also to track the work and the expense of doing that work per revenue line, right? And say, okay, this maybe one practice area is considerably more profitable than another, and that could just be something to be aware of, to say maybe do more of this and less of that. Is that something that you recommend?
Yeah, absolutely. We can. A lot of that will come right out of the practice management software. So like your Clios, you're able to extract that data, and because that's where everybody lives. They all live inside that product. And you can track it. And a lot of times it depends on how they're tracking it. Are they doing hourly, or are they tracking at fixed fee, or however they're working in their system? But you can track per practice area. You can even go right as down to the matter if you want to see if the matter is profitable. So there's a lot of ways we can do that. And then you can also get into realization rates and utilization rates and the collectability. I mean, that's another big piece. We see a lot of law firms come to us, and it's like nobody's been chasing things that hadn't been paid. And that's a golden opportunity for an accounting firm to step in and say, look, we'll help you collect on the old debt, because they don't want to be the one to call the client, but we can, because we're outside of it, and start to make those moves to help them pull in the money that they've not collected. Like Sarah said, when you get a client and you're like, you've got this much money you've been writing down. Why? We need to find out why, what's happening there.
Mm-hmm. Right, because I would have, and I think, money for a lot of people, it's a tricky thing. People, they're happy to do the work, but then they feel weird about asking for the money that they're owed. So I can imagine, just outsourcing that process. Like, hey, these people owe me money. Can you go hound them so I can keep a friendly face and a relationship with those people, and let sort of that happen. But let's talk a little bit about that process, because I think, you do the work, you've got to, obviously log the time or however you're doing that within your practice management system, but you've got to send the bill, and then you've got to collect the money, and then obviously all that goes in the account and all of that. But let's talk about that stuff, because I think this is where a lot of firms, they're maybe wasting time, or they're not collecting enough money, and it's affecting their cash flow. So what is an efficient, like modern, both billing and invoicing system look like for a law firm in terms of getting the money that they're owed, right? Because it doesn't really do you much good to do work and not get paid for it.
We love this question, I would say. It goes kind of two ways. Sometimes the reverse question is, how would I like to receive a bill from you? Do I want to get a monthly bill that's tens of thousands of dollars, and I'm an individual, or I'm a business? Or is it better to have me do a retainer, evergreen style retainer? Or is it best to, obviously I want you to be paid for your time, for the services that you're providing me, but how frequently are you going to bill me, and what does this look like? So that's one relationship, right? Sometimes it's the outline of what's already agreed upon in the engagement, and maybe that's not working for the law firm, because the law firm's putting a lot of expense and research, and they're not billing fast enough. Mm-hmm. So billing practices,
that affects your cash conversion cycle. Exactly. Now you're burning through a lot of cash. You're not getting the money back, and I think oftentimes firms don't really realize how important your cash flow cycle is, and keeping an eye on, what you're going to be owing and when that money's coming in the door. So I imagine a lot of what you do is helping them manage that process, and at least identifying areas where they're just not collecting the money fast enough, and how that could lead to, operational problems if you don't have the cash and to cover the operations.
We've had a conversation where we'll just say, I know you're doing the standard billing, the month ends, you're billing in the beginning of the month, but maybe we should do twice a month cycle. So you're getting the cash flowing in a little bit better, and maybe the bills are smaller. Sometimes that's just a little psychological trick, but you're not sending out a bill for $10,000, you're doing 2 bills or 5,000, and sometimes they'll get paid faster. And then the other thing is, a lot of times they don't want to pay, they want only to be paid by check. They don't want merchant services. And sometimes just adding the merchant service, or we love Confido, because Confido Legal, because it's got so many capabilities. We've worked really closely with them to kind of.
What is Confido Legal?
It's a merchant service provider that will put them, that they handle trust perfectly. The money goes into trust, and then the fee comes out of the operating. But they also have payment plans. It's got so much versatility behind it, and we really like that product for that reason, because it helps with certain clients need that, like a law firm that's working with family law. Maybe they don't have a lot of money coming in. The person doesn't have it. Having that ability to pay by credit card, you'd be surprised at how many lawyers will say, I don't want to have the credit card fee. But if you tell them they can add it give it to the client, depending on the state and the rules and all that, but they can bill it back to the client, then they might consider it because you get paid quicker, less friction at the time of payment. You'll get your money in faster, and that alone can just free up the cash flow for a firm that may be struggling. And it surprises me even to this day that there's a lot of them out there that just do checks. It's like, oh, not even offer ACH, nothing. And you come in, and we can usually convince them that it's a good stepping stone, and then they're just blown away by how they're being paid better than they were by check. Because waiting for a check and an envelope and a stamp, who has stamps anymore or envelopes in the house, right? Nobody does. Who has a check? So, I mean, those are the things that we start to kind of convince them. And then when you have these payment plan options, then you've got this ability to maybe somebody can't afford the full amount, but they can afford it over time. It's all baked into their agreement with them. And it gives a little bit more flexibility to their paying options, and it helps their client too.
No doubt. And it would seem to me that I'd rather have money today minus the 3% fee than waiting 6 months for a check. As you say, I mean, every now and then we probably all come across somebody who wants a check, and you're looking around like, well, where are my checks? Then you're like, where are my stamps? Where's an envelope? Nobody wants to pay by check anymore. You've got to be able to do it electronically, because I think you're just adding friction in doing business with it if you don't offer it. And you pointed out ACH, and just for people who don't know, essentially it's just an electronic form of check where the fee is minimal. But also, I think it's great if you can find scenarios where you can, and I do this all the time, where I want to pay by credit card, and just say, okay, well, it's going to be an additional 3% fee on top of that. And then I can decide if that's worth it to me to get my credit card points, or if I'm just going to do an ACH and just transfer the cash that way. But at least you're giving people options and things like that. So I do want to get into talking about the trust stuff and all that part of the accounting. But just before we do that, because we've touched on it a bunch of times, but the idea of integrating whatever accounting tool you have, QuickBooks, Xero, something else, but with the other systems that exist within the law firm, how important that is to make sure that those are connected, what's involved in connecting these accounting tools to your practice management tools or your CRM or whatever else you've got going on. How important is all that, and how do you do it?
Oh man, I think it's got to be at the forefront when you're making these software decisions, because you're going to spend, when you think about it, it's not easy to change software. I mean, it's a lot of money and time. So when you're making that decision, something I will say for myself, and Lynda and I have experienced this firsthand, we tried something out, it worked, but it didn't give us owners enough data to where we understood it, and it integrated in a lot of different ways. And we see this. Clients come to us with that same thing, or they need to get off the antiquated system and pick one. When you have an all-in-one, you have to ask yourself how valuable that is, and will somebody in the accounting space, in-house or out, be able to service you for the longevity of that? And what does that look like? Can you get your data out? So when you're looking at modernizing and streamlining, you have these components that are really critical. What is the value of me as the attorney and my staff that's relevant to being in court? How easy it is for me to get all this stuff? Do I have to sit there and call somebody to ask them for information? That's one piece. The next piece is that accounting is the critical decision maker in the end. So what we often see is when you make these decisions, it's not a switch. It's not like light bulb, you're going to flick it on and you're going to be able to get into it. You evolve into it. You learn to work with it. And you might have to add another layer on top of it for something else that needs to fine-tune specific to your needs. But your core basis is, does the revenue, does the value of time, does the information flow, and are you double entering all of this, and what does that value give you? Because it's not worth it. You've got to look to the streamlined pieces, and then from there you can really kind of look at some of these tools that the AI components on top of it that could add more value add in workflow systems. But I don't think that you should start with, oh, it's this, and this, and it's going to be this magic thing. You're kidding yourself. There's nothing magic about it. So you got to streamline it in an efficient way. So,
And so you mentioned something, and I think this is a bigger software question in business on the whole, but
yeah.
the idea of getting an all-in-one system that just kind of does everything, or whether you get different systems and integrate them, and which is better. And it sounds like it depends on the individual business or the firm and what they actually need, but I've always seen it as like, oh, you can get the all-in-one system where it does everything and it's all integrated, obviously, but it may not do everything all that well, whereas you buy the individual tools and integrate them, and then the individual tools are very, very strong at their specific thing. But what are your thoughts on that? How should attorneys navigate this as they're trying to make that decision if they haven't already engaged you to help them figure it out?
We have a phrase for it that Lynda says.
Let's hear it.
You want all your eggs in one basket?
Yeah.
What happens when the software goes down? What happens when they get purchased? Everything you do and own and your entire data is in there. PC law is a sure example of that. And you're beholden to whatever that is for the future. That's one quick
And a
example.
lot of the all-in-ones that are out there today that are the big names that have their own software and they've now added the all-in-one, they're just in their infancy and they're not that good right now. You can't maybe print a check, or you can't add software like Gusto to it for payroll. There's a lot of things you can't do. So, and you don't get the reports. You just don't get the reports. So if you're planning on firm growth, you're better off staying in a flexible system that you're able to get ready for the future and be able to grow. You don't want to grow out of something and then you're migrating all over again, because some of them don't just port over like you think they would. Common sense, like, well, this is made by this company and I can just switch to this. No, you can't. The all-in-one is self-contained. You always got to remember it's self-contained. So you don't have a QuickBooks. So now if you move over to a product that's going to be integrating with QuickBooks or Xero, now you got to take all that accounting data and move it over. And it's not a cheap date. So you got to remember that too, that anytime you have to do a migration, you really want to think of future growth in mind. Sometimes it's hard to conceptualize that when they're first starting out. They're like, well, do I really need all this? But you will need it, and you'll be surprised. Most law firms we work with, I'd say 99.9%, we're blown away by the firm growth with them. When they start out, they're all excited, and they just started their first firm and hung their shingle, and then nothing makes us happier to meet with them at the end of the year and say, look at what you did. I mean, you got to take a pause moment, because they're always head down doing their work.
Sure.
And then you take a pause moment and let's celebrate what you've done, because you've come a long way from where you started with us to the end of the year. And there's quite a bit of growth there. And I think sometimes we don't take those moments to celebrate the big things. We do get so stuck in our daily work that we don't take the time to kind of look and say, wow, look, yeah, you're right. I've really done a great job here. And now I need to hire. Can you help me through that? Do I have enough money to hire somebody? Or should I go part-time? Or should I hire a virtual outside contractor person? Those are fun times too, because we can actually look at it and say, this is what it will look like. We really recommend you do this or that. And I love being with a firm, and we've had some amazing firm growth stories with clients that Sarah and I had, and we sit back sometimes and go, isn't it amazing? It's so cool to see, like, look at that number that they're at already. It makes your heart sing when you see that with a client.
Yeah. Isn't that great? And just all the things that flow from that, and then the optionality that firms have in terms of really deciding how they want to continue to grow and having the resources to invest in some different things. And so it sounds like you recommend having different systems, because I think it's the natural progression for a lot of software companies is they grow and then they start adding features and start overlapping with other sectors or types of tools. One, I just wanted to give a quick call out, because you mentioned a couple of times. I use it. I'm so grateful for it, and that's Gusto, a payroll software. I think they do some HR stuff now as well. But my God, I've gone through so many shit payroll companies, and these are the big names you've heard that have great salespeople. That promise you Gusto. Oh, I was so grateful to come across that tool that simplified that process. I have no headaches. I'm not grinding my teeth over a bill I didn't see coming over some nonsense. So anyway, love Gusto. Shout out to them. Great tool. So, all right. Let's talk about some of the serious stuff, the stuff that's important, the compliance, regulations, making sure you're not getting yourself into trouble because those things could be expensive. There could be ethical violations that cause other problems. So what do law firms need to understand about staying compliant with accounting and particularly, as we mentioned, the trust regulations in their particular state?
Lynda, do you want to go or do you want me to go?
Well, so we've been through a few bar audits for clients, so we do know what it feels like, not feels like from their perspective, because that's really a difficult moment for them. But we also know there's a really short window of time that you have to produce the records for a specific time that they're looking at, and it can be random that they just knock on your door and want to see October of 2024. And now you have to pull those documents up and they'll say they want to see this was where your balance was and we want to know. So you want to have those records. We have the individual client ledgers that equals the total so they know every penny that was in that trust account. And then you have to make sure that you fill out the forms that they want you to fill out. You don't just spit out a report out of Quickbooks and say, here you go, it's the same thing. It's not to them. So you want to make sure you do it the way they want it to be done. It's so important that you follow the rules. Most attorneys know the rules inside out. They change, so you have to stay on top of that. You need to make sure that you're in the local bar association, you're on top of it, especially if you're a bookkeeper. You want to make sure that you're following the rules where your clients are practicing law. Make sure that you have it set up properly. So maybe they have multiple trust accounts. You want to have multiple liability accounts so you can fan it out and see what's at any given time, collapse it down. The totals should match the totals in the bank. And also in the practice management software. So you've got the three places, which is the three-way bank reconciliation. If you're doing an all-in-one, that's super easy to do because everything's self-contained. But if you're not, then we have to hop over we actually use a product in LiveFlow that we designed for three-way bank reconciliation, but you can also do it in a Google Sheet or whatever. You can create your own, but as long as you can show the bar that this is the amount of money that was in QuickBooks, this is the amount of money that was in Clio, and this is where the bank is, plus or minus, things that are in transit, those all they should all be the same number. And if they aren't there, which is the majority of clients come to us, they're coming to us because it's not correct. And now they want us to figure out how to fix it and fix it for them.
And are there tools that just really automate this process, or is there still a lot of at least manual verification that has to happen that makes sure it's working? Because I wonder, okay, you've got the money in your trust account, now you've done the work, so you want to move that, I assume, over to your operating account, but I imagine, I don't know, there's some technical stuff that has to happen. There's obviously compliance and regulatory things that have to govern how that happens. So are there tools that do that?
Your Clio and your LeanLaw, those are the products that will help.
You still have, you can't control what a bank's going to do if they're going to put in the wrong number. You said it was $500 and it put in $499.50. I don't know why. You can't control that, right? That's one thing. You can't control. There's some human elements still to this. Wire fees. We've had checks get returned from rather large institutions. You have no control over that. You just keep it on the check thing. I couldn't believe this, but a cashier's check. You think it's really good. It was a rubber check is the best way for me to describe it. It wasn't a good check. 6 months later, the bank came back and said, "Ooh, this didn't really clear." You have
so bank money's never even in the account. Yeah.
There's no automation to those pieces. You still, even if you add some layer of automation, you still have the human element of ensuring it. You still have to make sure you're aligning what's been brought into trust and what's been earned, making sure that those numbers tie out. You can make a simple mistake accidentally transposing the numbers, transferring the numbers. How does the workflow operate within the system? Who has the ability to transfer? Who is the approval process for that? There's a multitude of unfortunate circumstances that we've seen through the years. And to be honest with you, that's not an area that I would like as a client to think that you have automated. I paid you my trust money, and I would hope that you're instilling good faith in it, that I gave you that money for that earnings, and you'd pay me back in a timely fashion my money back, and you've paid everything else that happened in the case that we had together. And we've seen where it's very simple. You're a solo firm, you're doing your your allocations, you're doing your stuff correctly on those spreadsheets, and you made one error in a spreadsheet. You made one calculation mistake, and you now have overdrawn the account. That's an automatic paper.
Automatic audit.
Yeah, right?
So it sounds like you really need to be doing some sort of reconciliation on a regular basis just to make sure the numbers you put in are the actual numbers that are hitting various accounts, because that sounds like the biggest area you can potentially get into trouble if those things don't match up. So, we're coming up on about an hour or so here, but I wanted to start to sum up everything we've learned here today, because it's been a lot and it's been really good. But in terms of building, this type of scalable and an efficient system in the practice, what do you think when you say like a well-run accounting system? What does that really unlock for the firm in terms of making better decisions, better insight into expenses and profitability, and where you're trying to grow over time?
And it tells the story of the business. So when you're looking at it, a lot of times when we get into the balance sheet and an attorney's like, I don't really know what that purpose of that is. Or they see an account that, we show them what they took as distributions. And then they're like, I didn't take $4 million. Well, this is over the life of the file. And you have to kind of explain that. But I think sometimes having a system that is really bulletproof for audit and protected for the trust, which is really the ethics of the firm, how you're handling other people's money is really the cornerstone. Most attorneys, when you ask them, where'd you get your clients? It's referral. Well, you have to have good, happy clients for that. So having good processes in place, having the data set up the right way, having good processes in place for how you're doing your billing, how you're managing your money, when you're transferring the money over, making sure that you are transferring the money over. That's another thing that we see sometimes, that they're so afraid, they don't want to make a mistake, and they know their trust isn't exactly right. They kind of leave it there. Well, that's a bar infraction. You can't just leave it there and not show it as income. And that's another thing that we've seen. So helping them clean that up. We always say we help them sleep at night, because this is something that's been, this happened because they had a bookkeeper that didn't know how to do it. And they're just like, there's a lot of anxiety over that. So if we can help alleviate that for their client, I think that's our first and number one goal. And then getting it set up and structured properly so that we can help them grow. We have those talks about where are you going with the firm, and do you have the right insurance coverage, and do you have yourself set up, and are you spending the right amount on your marketing, and where are you going with this? What is your expected growth this year? Are you going to be taking another attorney into the fold? Those are the questions we can ask, and then help them grow forward with that and make sure that they're in a place that they're going to be able to afford that. Taking that new attorney on is not all of a sudden a lot of revenue coming in, because sometimes there's time there when you take them on as a new employee. They got to learn their workflow processes at the firm. And then while they're doing that, they might be doing billable hours, but guess what? You don't get to collect on that for maybe another month. So you have to factor that in. You got to pay the person during that time frame. So there's a lot of conversations that we have internally and externally with the client that helps them to understand exactly you want to see this, and you're here, and we're going to get you there. And how are we going to get you to this place in a good, safe way? I think that's probably one of the better parts of our job, and the part we enjoy doing as accountants. I think that's the biggest benefit, is helping them get to that part. And if we're going to go here and they ended up here, then we'll all have a big party and celebrate it at the end of the year. Like, yay, you've even achieved your goals.
They sometimes have that unexpected swing, and then it's like, oh my God, it's total chaos.
Then they're scared. Though. Then all of a sudden it's the reality of like, oh my goodness, did that really happen? And it's kind of funny, but we'll have a great.
This is the importance of setting things up properly to begin with, because if once you start going and you actually are successful and busy, if you haven't set things up, then the wheels are going to come off, and the problems that you're going to now have to like unwind and fix way more difficult than just getting things set up in the beginning. And I say this all the time. This goes to any aspect of the business that's growing, is get the systems and processes, whether it's accounting or delivery or sales, I don't care what it is, get them dialed in as much as you can, because as they get, as things get busy, all of the problems start to surface. And if you have small ones that you can fine tune, great. But if you haven't done any of the work up front, you're going to end up with unhappy clients, and that's going to affect your ability to get referrals. So as I guess a last question for you all, for any firms listening that, feel like, all right, this is something they need, to start thinking about, what are just some of the first steps they need to take to start getting this stuff dialed in so that they can scale and grow and have all the proper insights into the, the performance of their law firm?
Definitely look at those practice management softwares that you're using, and you need to go deeper. And then hiring someone, even if it's just spend a couple $2,000 getting someone come in, get it cleaned up, and then train with them a bit. That's fine. That's okay. Understanding where you have to understand your business. I feel like people stand up a shop and like, I got a business. And kind of to your point, Jason, there's way more involved. There's a lot of licensures behind it. There's a lot of things. So if you start with that structure, get with someone that can help train you, even if it's for that one moment of time, and then once you hit a certain dollar amount or plateau or your first hire, if you've got your first hires, that's the second step. Now you really need to start engaging with an accounting professional for sure, and someone who can help you that's in the profession. Like, we're legal specific. We have colleagues that are kind of generalists that do a little bit of legal, and then they're coming back to us and asking us questions, and we're like, oh, it's a disservice. Really need to be with that niche or that specific individual that can help you. And not everybody has to come with growth. I know we talked a lot about growth. It's okay to be at a certain tier or a certain level and sustain. But again, you don't know what that next opening door is going to provide you, what that opportunity will look like. So if you can make sure you're solid in the beginning, your foundation is operational, and we've seen this tried and true. We have a client that had exceptional growth at a rather quick tick. We brought in another consultant to work with us on top of it because that growth mind needs to happen. So once you build that foundation, that financial team, and that's, you got your tax, you got an accounting person like us who has a voice in it. We're looking at it through that lens and all the other pieces. Then I feel like you can get in the car and safely drive and start really fine tuning and turning those knobs and realizing what potentials you may have. And you'd be more strategic in how you're going to operate this business. Maybe you operate it to an exit strategy. Who knows?
Yeah, that's great. And I do like the point you just made. If you spend any time on social media, it's just growth. As if that's the only thing that matters in a successful practice or successful business. It is okay to hit a point where you're like, this works for me. You want to maintain maybe slight growth. I think you're either growing or you're not, but that's okay. And so I appreciate you saying that. And it was great to have you both here today. So I'm here with Lynda Artesani and Sarah Prevost. They're accountants. They're both from The Proper Trust. And we've been talking about how to properly set up good accounting practices in your law firm. You can find Lynda and Sarah at thepropertrust.com. They both have LinkedIn accounts. We'll include all this info in the show notes. So if you do need some help with your accounting, getting things set up, getting advised, they're here for you. They also are host of the Accountants Law podcast, so they clearly know what they're doing there. I just wanted to also mention, partly where I came across you guys, is your article on the ABA's law practice today, how to set up. You wrote the article on it, how to set up an accounting system for law firms. So we'll include a link to that as well. Do you all have anything else to add? Where they can find you, what things you might be able to help them with? Anything you want to promote? This is it.
But we also help, if any bookkeepers or accountants are listening in, we also have the Accountants Law Lab mastermind group. We meet once a week on Friday. You join us, you get access to all the meetings that we've had, all the deep conversations that we've had. It's great to have a place.
That sounds cool. Tell me about that for a second.
Yes. We actually, called again? It's called the Accountants Law Lab, and I know, lots of the same thing, but it's actually a group of bookkeepers and accountants. We get together every Friday. We talk about AI and where that's going in our industry. We do Ask Us Anything, where most of the times people try to stump Sarah on Clio questions. But it's questions about a lot of things. We can talk about marketing. We can talk about growing our accounting firms. And then we also do a topic of the month. We could do advanced client costs for a month, and we'll just deep dive into that and talk about that. All different topics. So we have that as well. It's affordable for people. It'll get them. I think it's nice to get a lot of like-minded people because we learn from our members just as much as it's a kind of give and take there. So it's a great thing. We end our week there. It's just wonderful. We've got a great group of people in that group too. So
Yeah, I would imagine you're hearing about the challenges people are facing, but also the solutions that people may have come up with that, you just haven't come across yet.
Exactly. We had that happen this past week. I had somebody was doing something with the software that I have a problem with, and she told me her suggestion. I'm like, oh, why didn't I think of that? That's perfect. I'm going to do that. And I already changed the product so that it works in a better way. And I never thought of what she said. So it was really a great piece of insight that I learned from. So it's a great group of people.
Awesome. That's the Accountant's Law Lab.
To keep adding to it.
Yeah, that's all right. I want to make sure I get that down. Well, Lynda, thank you. Sarah, thank you so much. I really appreciate the time that you've given me to come on the show and talk about all of this today. So thank you so much. Lynda Artesani, Sarah Prevost, everybody. That's it for today. Lots of great new shows coming up. And so we will see you next time. Thanks for listening to the Alpha Lawyer Podcast. I'm your host, Jason Marsh, and I appreciate you joining us today. If you enjoyed this episode, please subscribe, leave a review, and share it with other lawyers who might benefit. You can find more resources and insights on building a thriving law firm at alphalawyer.io or the Alpha Lawyer YouTube channel. Till next time, keep building the firm of your dreams so you can live your best life.